Robert, it's great to have you on the show, man. I'm looking forward to chatting with you.
I'm really excited to be here.
All right. It's your first time on the show, so I do want to dig into your background a little bit. You know, mining is a frontier industry, and you've spent a lot of your career in frontier countries, right? Like the Congo, all over Latin America. And some of the bigger brands that you've helped lift off the ground would be, you know, Aris Mining, co-founder and CFO, Rua Gold, which became Equinox. But walk me through your background in this industry and what brought you forward to today. I want to start there, and then I'm going to pull on some threads.
Yeah, I mean, I started my career back in Perth, Australia, and Perth is an awesome spot to start because the whole city there is mining centric. So I'm an accountant by trade, but it was always working in the mining space. And so I loved growing up and seeing the mining industry around me. I loved seeing dump trucks driving up the highways, the scale of everything. And so I was a mining nerd from high school. But yeah, essentially started the career in Perth, at Ernst & Young, one of the big four, got my foundational skills. And I think the one thing I learned early on in my career is to have a really long vision. I know my real earning years should at the end of the day be my late 40s, 50s type time when you've got all your skill set.
Yeah.
So I haven't rushed into trying to grow up the ladder too quickly. I really wanted to build the foundational skills. So I did my 5 years or 5 years in audit at Ernst & Young, got my chartered accounting. I went on to do a Master's of Science in Mineral Economics and spent a couple of years at BHP in Perth. And then I wanted to get a lot more boots on the ground experience. So as you mentioned, I took this plunge and went off to the Congo, and it's not the normal move for most accountants. And every one of my peers thought I was crazy, but it was the best work experience of my life. I mean, I was living on a mine. You do your 12-hour day. You go to the bar at the end of the night, you talk to all the technical guys, you understand the business, what's the concerns, what's the challenges, how's things going. And it was such a steep learning curve of actually being and learning how the business operates. That was amazing. I mean, social life is non-existent. I was on an 8-week on, 2-week off roster, and my wife had enough of that after a couple of years. And so we moved to Canada. And again, I was really fortunate to land with a CEO like Neil Woodyer, who started Rua Gold, who started Aris, and be under him for the last 8 years that I've been in Canada. Very fortunate, but he also, not many people last 8 years with Neil because he's a really tough boss.
Sure.
But he's Neil the deal. He builds companies. He buys, builds organic growth, non-organic growth. He sees the business and how to grow it. And coming from that finance background with a strong understanding of the mining industry and the business was a great match because I could get into the new assets we bought down in Mexico, Colombia, down in Brazil, and really understand how to integrate them, how to make money out of them, and actually create value for companies and ultimately shareholders.
Let me ask you, because there's not many folks that have created as much wealth as a guy like Neil Woodyer. You know, he's in a small group in this industry, right? And you made a comment about sort of like longevity and being patient. And I think you said you recognized that your earning years were going to be your 40s and your 50s. And when you said that, I found that like incredibly refreshing, you know, and I think about my career in the same way, like it's build, and then eventually collect, right? But that's the model I've seen work at a scale that I want mine to work at more frequently. Is that something you picked up from working with somebody like Neil, who's clearly demonstrated that? Or is that just like ingrained in you from an early age, or how did you adopt that?
Yeah, I mean, Neil definitely helped build that, but even at a young age, I always had that. We didn't grow up in a wealthy family. I was the youngest of four.
So you had to be patient.
So yeah, you had to be patient. You knew that I saw my parents grinding away all the way up, and they had late retirements and things, and that was just life. And that's not that it's a tough life. This is life. Like it's the challenges is what build you at the end of the day.
Yeah, man.
And so I had that, but then Neil added to that in the sense that he sees the opportunities and he knows when to go hard and he knows when to pull back and just let the business roll and let the essentially the guys on the ground see the opportunities and build it out. Sometimes you need to have more input. Sometimes you have to have less input. Light touch, a lot of touch. There was a point in Mexico we were going down for 2 weeks a month and as a corporate office working in the site there. And then we realized after a while that we were probably having too much oversight in the mine, and then we pulled back and we were going once a quarter type thing. And so you have to have that balance of push and pull, and Neil was good at teaching me that as well.
Okay, so I wanted to start this conversation by sort of touching on your frontier experience, right? Because today you're in a frontier of another kind, right? You are building a company based in New Zealand. And although like politically it's not frontier whatsoever, but it's not the first country that comes to mind for mining investors until recently. And I've heard you make the claim that you believe today New Zealand may very well be the best mining jurisdiction in the world. So I want to unpack that a little bit. Like what's changed, where to come from. And I lived there for a year. Like it's a beautiful country. And that was 20 years ago. So my experience there, I think, is what a lot of people think about when they think about New Zealand, the adventure capital of the world, right? Like beautiful scenery, beautiful wilderness. What's changed on the ground in New Zealand, and why is this such an opportunity today that people should be paying attention to?
Yeah, and you're right. It is labeled the adventure capital. I think they invented, I mean, the islanders invented it, but they were the first to commercialize bungee jumping.
Right.
Yes. New Zealand is known as the New Zealand population are adventurous. They are daredevils. They have a really good zest for life. And it's through the last 30 years of sort of focusing on that tourism side that the rest of the industry sort of fall away somewhat. And so they got to a point in sort of 2022, 2023, coming out of COVID, they didn't quite have the hockey stick recovery that a lot of the other rest of the world were having.
Of course.
And so tourism wasn't coming back, and tourism is known for low paid jobs anyway. And so across the Tasman, Australia is having this huge mining boom. It switches whether it's an iron ore boom or a gold boom, which they're having now. But there's a huge amount of jobs and prosperity there. And all the tax-paying Kiwis, the young Kiwis, are all going across the water and working in Australia. So you've got a country that's in a recession. There's not enough jobs or well-paying jobs, and they're losing all their taxpayers. And so the government saw the problem there. And the new government, it's a coalition government. It's more of a conservative style government, but they're doing really good things in terms of trying to get New Zealand back on track economically. They're trying to balance the budget. They're trying to do the right thing for the long term of New Zealand. And mining is one of the vehicles they're using to help kick off industry and get regional growth and more jobs, et cetera, et cetera.
And it seems like at this moment, it's far more than just lip service. They're actually impacting the permitting times, which is what it all comes down to. Would you say that's right when it comes to a policy? Like they can't affect the geology. And I want to talk about the geology in New Zealand, but when it comes to government decisions, it's all about, can you reduce my permitting times responsibly, but can you reduce them? Is
Completely.
That right?
Yeah. No, you're bang on. And that's where they started. I mean, before the Trump got in and started talking about fast track projects, and before Canada started talking about fast tracking, New Zealand was the first. And
that's right.
They sort of set the example for all these bigger countries to follow, because in 2024, they introduced this fast track legislation as a draft bill. By the end of 24, it was passed. And now early 2025, there's mining companies like the big $4 billion Oceana Gold group that have 2 mines in the fast track process. They're going to get one of their biggest projects called Wharekirauponga, which we have a project adjacent to. That is one of the first mines that will go through that fast track process. And I'll say, I mean, it's called the 6-month permitting timeline. The government actually came out recently. They're 3 months into that process. They started it in April. The government came out and said, I'm sorry, guys, this is a multi-billion-dollar project. It's quite complex. We need an extra 2 months. And so suddenly we're on an 8-month project because they're behind schedule or because it's such a complex project, which is astounding.
Yeah, that is.
And the government have come out and said, look, we're doing the best we can, and we just need another couple of months.
Doing a pretty good job.
Yeah. I have no issues with an 8-month permitting process. It's just so refreshing to see it. And you're right, they haven't cut corners. It's still all the same requirements for environmental impact assessments, community impact, the Maori establishment they've got there, and making sure you have enough consultation with the groups there. So everything is being done. Just the bureaucracy, instead of having a stage gate approval process, it's all in one panel. And that's how they fast tracked it.
Right. Okay. You know, reflecting on the adventure attitude in New Zealand, there's no fault liability there in the adventure tourism industry, which means that like if I go on a whitewater rafting trip in Canada and I get hurt, I can sue the operator. You can't do that in New Zealand. But as a consequence, if you're willing to sign the waiver, you can do some wild things, right? It's a really fun country, you know? I remember that.
Which is very practical. Like if you want to jump off a bridge, like
own it.
Yeah.
Right?
You made your decision here.
Yeah. I love that. So I'm glad you pointed that out, because today we think about, US, Canada, fast tracking either permitting or the extraction industries to some degree, more or less. But New Zealand, from a place of urgency, right? Like their back was against the wall, tourism dependent nation. They were absolutely hit the hardest during the 2020, 2021, isolation periods. And it's a country that's quite far to get to, and international travel didn't pick up right away. So they had to think on their feet and do something, right? Walk me through the catalyst for Rua. Like what got your attention? Why are you involved? Like walk me through the origin story a little bit.
Sure. And I can't take claim to putting this company together. This started in 2019 at the same time Neil and I were starting Aris Mining. And so I was full-fledged in Colombia building that company, which is now a $2 billion gold producer. And while Tyron Breitenbach currently at the time was an investment banker at Cormark, came across these tenements in New Zealand, South Island. And he's a geologist turned investment banker, so he loves looking at these rocks. And he sees this opportunity in New Zealand to get ultra high grade tenements. And we're talking a past producing district that has already produced at grades up to 50 grams a ton. And so he's really attracted to the gold there, and he gets his hands on these tenements. And Aussie that is not able to finance it himself is looking for a partner. So Tyron helps him, brings it forward. He's at Cormark, so he hands a hat around the ring and raises $10 million. And most importantly, brings on Chairman Oliver Lennox King. And both Oliver and I are Kiwis. He's got a much better connection to New Zealand because he stayed there into his 20s before he left and became a very successful mining entrepreneur himself. Oliver's had just sold Rocks Gold at the time. And he then, as a private company, hired the geologist, Simon Henderson, who we have today as our chief operating officer. And the three of them really spent 2019 all the way through to 2023 collecting up and getting the tenement package that we've got, as well as doing all the surface work. It's very slow, boring, methodical work that you need to do. It's all the precursor to drilling. But if you do it as a public company, the market hates it. They have to be patient. They have to wait around years before you really get the juicy success. And so we did that all while we were private. And so I came into the story as a director in 2023. There was a plan to go public with the company. And so I was helping from the financing side get everything in order for the IPO. And we came across a shell that had 7.5 million. And at the same time, Aris had gone through this evolution of going from a startup into a $1 billion company. And I was with Neil in New York, and we rang the bell on the New York Stock Exchange. And if anyone knows the rules that come in when you're a New York stock listed company as a CFO, you're on SOX compliance, you're on improving process and IT infrastructure and cybersecurity controls. And I was so far away from mining that it was just not my role anymore. I didn't get out of bed excited to get there. So I saw a natural end coming to that role. I gave my notice to Neil in January, and as the company listed in April of 2024, I became CEO of Rua. And that's where I've been now for the last 18 months, and it's been an amazing ride. And again, I guess the connection with Neil is I love learning from guys that have done it before. And so the real attraction to Rua Gold was not only the geology, it wasn't the changing politics, but it was also Oliver himself, who has such a long-term view, very different management style, but has his own way of creating value and a huge amount of success in a number of his ventures in mining over his career.
So for anyone who's never looked at New Zealand as a mining jurisdiction, maybe at Oceania, maybe that's it, right? I've heard you speak at length about the geology, next level geology in New Zealand. Walk me through that. And is that somewhat a consequence of the country just being relatively underexplored?
Yeah, definitely. I mean, I've especially in the last 10 years in Canada working heavily on the M&A front, I've looked at so many different projects. And one thing the gold industry was bad at on the previous gold bull run from sort of 1200 up to 2000 was the cost increases that came with that. So you didn't get big margin swelling that you get today. But where I'm going with this is I've looked at so many low grade marginal mines in my time. And so as soon as I saw the grades in New Zealand, I was astounded. We're talking 20 grams a ton, 50 grams a ton. I mean, in today's terms, the project in our North Island, that Whare Kiraponga, the Oceana Gold project that's on the 6-month permitting process, that's a 1.5 million ounce deposit at 18 grams a ton. The average grade being produced today is 1 gram. So the margins that these high grade gold mines produce is phenomenal. And there's very few high grade tier 1 type deposits out there that exist anymore. And New Zealand's got them because exactly as you mentioned, it's been unable to really get into there for the last 30 years. Mining's been around, and Oceana Gold have 2 operating mines that have been going since the 1980s. But there's been no new exploration because, similar to Canada, permitting timelines have blown out to 10, 15 years, and no one wants to sit around on a project for 10 years waiting for it to get permitted.
That's right.
And so there wasn't much exploration done over the last 30 years. And fortuitously, we have a good land package before the politics have changed, because now that it has, and now mining's looked upon more favorably, there's a rush of gold miners going in there, and there's a number of new public companies trying to get hands on tenements there. So we're very fortunate to have such a favorable jurisdiction and a favorable land package.
Well, I want to dive into that a bit more. And so there's a nice sequence of events occurring in the country. There's government incentives right now. They're seeing essentially brain drain to Australia for better jobs. They need to shut that down, bring those jobs back home, the resource jobs. It's an underexplored country, and there's precedent being set that you can't get this done in New Zealand, and Oceania is setting that precedent right now. That's triggering a flood of new mining capital into the country, which is great. If somebody let me ask you, if I were to ask you objectively, what's the value proposition of Rua right now? If you were to talk to a brand new prospective shareholder, here's why Rua is worth your time, where would you start?
I think 3 key things that objectively, if you're looking at investing in any company, 3 things you look for is jurisdiction, which we've covered extensively. I mean, that is amazing. You're not going to get your assets stolen. You're not in some dodgy place where you're going to suddenly have a complete regime change. Secondly is the team, and the team is so key. We know how to do this. We know exactly how a company is built. We're not explorationists. I'm not going to say we're exploration masterminds, but we know how to build companies. And that's actually more key, because we know the geology is there. And what's important now is how we build and structure the company as best we can for our shareholders. And then the third thing as to what anyone should be looking for is obviously the assets. Is the assets really sexy? And we've got really sexy assets. I mean, Reefton in the South Island is past producing. There's this gold rush in New Zealand, which was huge. 2 million ounces came out of there from 1870s to the early 1900s. And then it didn't get touched since. And these old timers would find these outcropping quartz veins with gold in them, and literally just follow these quartz veins down. And as I said, they'd be producing gold up to 50 grams a ton back in the early 1900s. And so you could only go down around 500 or 600 meters back then before these brick and these timber shafts would actually just start collapsing, because they didn't have the technology for deep underground mines. But today mines go down 3-4 kilometers. And so there's this whole area that we know there's gold. The exploration risk is really low, in the sense that there's a hell of a lot of gold left in Reefton. It's just a matter of how do we most economically find a 43101 compliant resource as quickly and as efficiently as possible. And that's what we're doing right now.
Okay. And walk me through that process a little bit. And are you leaning on any innovative strategies to expedite or control costs to move towards that resource estimate?
Yeah, definitely. I mean, we've already got close to 500,000 ounces proven up today. And so we're well on the way to building out a decent resource. And what we want to focus on now is building ounces as cheaply as possible.
Yes.
I mean, I think Snowline is holy grail of building ounces cheaply. I think they're somewhere around $3 Canadian an ounce that they've spent in developing that resource.
Mhm.
I mean, that's geological heaven. I'm not going to say we have that in New Zealand. We're chasing high grade narrow veins, but that is the aim of the game. And that's where we are right now. We're aiming to build resources somewhere in the $10 to $15 an ounce range. And that's what we're spending to date. And the way we're doing that isn't actually going after these old mines that have gone down 500 meters. We know those veins run really deep. And the way we're so confident there is because there's a neighbor in our district who's got 800,000 ounces at 24 grams a ton that goes all the way down to 1,500 meters. They're the one neighbor. We control 95% of the Reefton district. They've got 5%. They've got that 800,000 ounces and they've got that mineralization down to 1,500 meters. So we know it runs deep.
Remind me the name of the company.
That's Federation Mining.
That's Federation Mining.
It's a private Australian company.
Yes.
They've raised over 250 million Australian dollars. They're building the mine right in the middle of our land package. And that's a whole different sort of dynamic of why we're there as well.
Yeah. Because there was a bit of a bidding war between you two, right? For your present asset. Is that right?
Correct. Yeah. We had essentially the north east side of Reefton. And then there was a ASX company that had the southwest side. And we made a bid to take over that land package. And that essentially enveloped the private mining company Federation right in the middle. And so they didn't like the fact that we were surrounding them, that we were taking over the district. But luckily enough, we had enough shareholders that really liked us with our district scale opportunity, and they voted on in favor of us. But Federation did try and outbid us twice on that one, and luckily we got that one through. So, but it's a really good. They've done a great job in showing what the potential of this district is, with the deep mineralization, with already having a permit, with being in construction already. So we know that you can get mines built in Reefton.
Yeah.
These guys are ahead of the game. They're already doing it, and we're alongside them building out a resource. So, but back to your original question, we're not going deep first because that's expensive. It's timely. When you drill 600 meters deep, it's $1 million a hole. It's sort of takes 3 or 4 weeks to get down there, etc. We've got targets because of the 5 years we've been private. All the surface work that's been done, we've got targets the old timers didn't touch. And so we're going after those ones. We're going for the shallow 150 meter, 200 meter holes, and we're hitting really high grade intersects. We're talking about 20 grams a ton, 30 grams a ton. We're hitting those intercepts already, and we're finding them close to surface. So when it comes to taking your explorationist hat off and putting your developer's hat on, you're not worried about doing a 4-kilometer decline underground. You're developing straight from surface into ore, which creates a whole different profile of development.
Yeah, let me ask you, what are some of the biggest mistakes you've seen companies make when they're trying to make that bridge from exploration to development? Like, where is capital misallocated, or where are they moving too fast, or they should be patient? Like, what do you see, Robert?
Yeah, it's an interesting, and it's funny my perspective I have, because I call it the Australian-Canadian way of doing exploration. The Canadians love the long-term drill story. Let's drill this thing out. Let's realize its value. How big can it be? And keep going. Like Great Bear was the best success story, but the worst example for the rest of the mining industry. Like, don't even declare a resource and sell it for $2 billion. Like that's great when it happens, but it's so few and far between. The Aussie model is then on the other end of the spectrum. Find 500,000 ounces, let's build a mine, and then we'll worry about the rest later.
Let's get to economics.
Totally. Right. And that's somewhat what Federation have done as a private company. They've raised
of course.
800,000 ounces. Let's spend $250 million and build a mine.
That's exactly what they did. Yeah.
I think you need a happy medium, because you've got the high risk of staying as an exploration company and blow my brains out if I was sitting here drilling for another 5 years and telling the same story for 5 years. That's not my forte. I like to get to production and grow a business. At the same time, I don't want to go in and build a mine life that only has 5 years on it, because I want the Reefton community to see a change. I want to see a 20-year mine. I want to see the whole community come in and live here. I mean, that's the joys of New Zealand. Is it's not an Australian fly in, fly out job. Everyone drives in and goes home to their family every night. Fly in, fly outs are so hard on families. And a lot of the skill set we get is because you can drive in and out of the mine right now exploration drill rigs and things, and you can go home to your family. And if you have a 20-year mine life, then Reefton will step up and build the facilities around the mine. And you see that in a lot of mining towns around where there's long life mines. The entire town exists because of the mine. And you don't get that sometimes if you take that Aussie approach and just look for a 5-year ore body and hope for the best that it continues.
Yeah, certainly. Okay. And I like that context, and I absolutely agree. You see that all day long, specifically with Canadian companies, Vancouver companies for sure. Great when it's great bear, but you're right, 99.9% of the time it isn't. What's your cash position in the company right now?
We were very fortunate. We got a raise done in June this year, and so we're sitting with $14 million. All of our raises to date, we've raised $25 million over the last 18 months. All been done without warrants, all really well institutionally supported. And we're fortunate, again, it goes back to the team. If you've made money for groups before, they know you're not going to mess around. They know they see what you've got and they go in open-eyed. There's exploration risk all the time, but institutions will build that into it and they like what we've got in the team that are running this forward. So about 27% of our float is held institutionally. 19% is held by a group of high net worths, and leading the last raise was a US individual who loved the geology. He's a retired geologist that essentially saw what we had in Reefton, loved the geology there, loved the district scale. He called me and he said, I want 10% of the company. And so I flew down to Virginia to see him, and he wrote me a $6 million check, and the rest, all the institutions filled in behind. So we got a 14 mil raise done. We're sitting now with 12 to 18 months of runway of really aggressive drilling, between 3 and 4 rigs operating for the next 12 to 18 months. And we'll be able to deliver a lot to the market with those drill rigs.
Yeah, which is clutch. The next time you go back to the market for cash, you have enough in the bank right now to materially change the value of the business, which is what we all want to see. Can you add some context to the plan for capital allocation over that 12 to 18 month window, specifically like what investors could expect from a news flow standpoint?
Sure, yeah. I think right now we have 2 rigs running, and it's running at Old Creek and Cumberland, which are 2 targets within that Reefton goldfield deposit.
And both of these are on the South Island of New Zealand, just for context.
Correct,
because you also
yeah.
have a package on the North Island.
Yeah, so we've been very focused on the South Island. We've done a lot of early surface work on the North Island, but the bulk of the drilling is all South Island. And so we'll continue those 2 rigs. Yeah. We'll ramp up to 3 rigs. Essentially, one of our targets, Old Creek, is a gold antimony style deposit. And I'm not going to sit here shouting from the hilltops that we're turning antimony producer here. Right. I really see the value of it. I like having it as a byproduct, both from an economic and a strategic permitting side. But it's such a consistent resource builder for us. We see a path by the end of the year to have somewhere between 300,000 and 500,000 ounces just at that Old Creek target.
Okay.
Which would be a great starter mine. Yeah. And so we've designed a 4,000 meter drill program that's going to get us there. And we're going to put 2 rigs on there for the next 4 months. And we're going to execute on those 4,000 meters and then refresh the resource by the end of the year. So that's one of the targets at Reefton.
Yes.
The other 2 targets are much more similar to the Federation mining type deposit where there's no byproduct. It's just a straight gold ore. Yeah. And so we're going to have 2 drill rigs going after these Cumberland and Alexander River targets. And these are these high grade veins that you need to drill quite closely because it's a variable gold system. And so we want to make sure we understand how consistent that grade is, as well as the pinching and swelling of the veins. And then we'll be able to get out the understanding of can we build mines with these chutes of ore coming through there. So we're going to be developing those while we're developing the resource. And that's really what the market wants to see. If an analog would be Southern Cross gold. And we haven't gotten into the geology too deeply, but the Victoria, Bendigo, Ballarat region of Australia runs on the same Lachlan fold belt down to the South Island of New Zealand.
I didn't know that.
And so it's exactly the same age of rocks, mineralization style. Southern Cross Gold has that gold antimony style mineralization that they're
one of
finding
the
as well.
best discoveries last year, probably, right?
Exactly. And we have that potential. And so it's all about getting onto the trend, and they call it the ladder approach, and drilling and doing this ladder style drilling. Mm-hmm. To really understand the trend of that ore body. And that's what we're going to do with the other 2 rigs is really build out a lot of that geological understanding on the high grade gold there.
Okay. And what's the total scale of the drill program? All 3 properties combined?
So right now, we'll be looking at having 3 rigs running there for the next 12 months.
At Old Creek.
Sorry, just across the Reefton district.
Right. Okay.
And we'll be moving them around the Reefton district as we have exploration success and where we want to target. We'll be a bit nimble in that respect, but we'd estimate around 1,500 meters of drilling a month across the district.
Okay. All right. Got it. Okay. So decent cash runway, and investors can probably expect tons of news flow with 3 rigs spinning simultaneously, all on your Reefton asset. That's where the action's going to be, and that's where the news flow is going to come from.
At least for the next 4 or 5 months. I don't want to take away from the North Island asset.
Can we touch on it?
Yeah. I mean, I had investors coming into that 14 mil raise saying this needs to be spent on that North Island asset.
Interesting.
The North Island asset is like, it's elephant country. You're an epithermal zone of New Zealand now. You think of the volcanoes and the hot springs of New Zealand. That's these epithermal gold deposits as what creates the K92s in Papua New Guinea and the Japan gold rush that they had. It's all epithermal volcanic gold. It's huge. And so we'll be looking at drilling there at Q4 this year. And that coincides, obviously, as I said, Oceanic Gold have their Wharekirauponga project literally adjacent to where our tenements are.
Yeah.
And one thing I haven't mentioned is Simon Henderson, the geologist, our chief operating officer, he discovered Wharekirauponga. So he's worked in Waihi for 25 years up in that North Island. And he was the biggest pusher to get that tenement package because he knows what's up there. Waihi is a 10 million ounce produced mine. Like that's already been going since the 1980s.
We've already produced over 10 million ounces. Yeah.
100%. Yeah. And Wharekirauponga, the project is that 1.5 million ounces at 18 grams a ton. Mm-hmm. You just don't get many high grade, long life mines. And Oceanic Gold know it's open in every direction. They're not developing it just for the 1.5 million ounces. They know it's bigger than that. So they've done their PFS and they're developing into it, knowing that they'll find more gold once they're there. So we're adjacent to it, just north, and we're going to start drilling that in November. And again, elephant hunting in elephant country is what you want to do sometimes in these gold mining plays. And so that one's much more of an exploration play. That one is no drills have gone into that district before. It is more greenfields, but we're pretty excited because we see the exact same surface features as our neighbors at our property as we have now.
I love that the capital came with that stipulation that you had to look at the North Island asset. So you'll be spinning drills there Q4, probably news out Q1 2026,
totally, yeah.
Something
and to
like
put
this.
some numbers around it, the 14 mil in the bank, we're going to put 12 mil into New Zealand. We have a serious amount of that going into New Zealand in terms of spending. We'll have 1 mil going into marketing because we believe you have to market and get the name out there and get as many eyeballs on the story.
Yeah.
And then 1 million to stay listed and then all the overheads that come with the company.
It's a very productive use of capital. Okay. I appreciate that. Okay. So we're heading into a super busy news flow season, probably, right? Lots to talk about and lots to stay on top of for the next 2 quarters for sure, right? Immediate news flow will come out of the South Island. And Q1 2026, we can begin to understand and answer some of the unanswered questions about what you're looking at up north. Yeah. Okay. I want to have you back on, in the fall and get caught up on what's developed in the interim, what the treasury looks like, what you've discovered, the unanswered questions you've gotten answers to. And Robert, it's been great having you on the show, man. I really appreciate you making the time.
I love being here. I love the studio. I love the team. It's great to meet you in person.
Likewise. All right. Thanks, man.
Thanks very much, Jay.